Good morning, everybody. It is a beautiful sunny morning, and we have a webinar for you on money management. So if you have not already taken an opportunity, there is in the lower left-hand corner a copy of the presentation for your reference. It has some links in it at the end so that you can have access to those links. And we have a couple of worksheets in the download and print section so that you can use those for your own use to help you set up a budget down the road. We will get started with our presentation on money management. Last time we had a webinar, it was on the very, very, very basics of money management. This time we are going to be talking about the different tools that you can use. This, again, is not an in-depth webinar. It's more in-depth than the last one. But there is a whole page that I'm going to show you when we're done where you can get all of the training modules that can help you get through the program on your own. Let's move forward and introduce our guest speaker, Juliana Heckel-Judd. She is a CRA Relationship Manager with BMO Harris Bank. Juliana, why don't you tell the audience a little bit more about you and tell us what a CRA Relationship Manager does.
Right. Well, CRA stands for Community Reinvestment Act. And my role within the bank is to do community outreach with nonprofit agencies, government groups, community organizations, and really to help promote affordable housing. And of course, that's the ultimate goal, but we also do a lot of financial literacy to help people become home ownership ready. So that's some of these very basic money management skills that we're going to be talking about today.
Great, great. What we're going to do, and again, this is all of the components that make up the training program for MoneySmart, and we'll show you more details where you can find more information at the end of our presentation. Never spend your money before you have earned it. Thomas Jefferson said that many, many, many years ago. He was one of our founding fathers for the United States of America, and he was a pretty smart dude when it came to money. So we want to honor that and help you make sure that you're able to spend your money in the right way as well. So before we get started with the different tools, I want to pull out a poll question. How much does a currency exchange charge you to cash your check? And I know we've got a few more than just one person on the call, so it's giving you a couple of options here, and you can only click one. And Juliana actually made a phone call to a local currency exchange, and she found out something that was just astonishing to me.
Right, I did. I called and just asked what their fee would be to cash my $1,200 paycheck. So if you get paid every 2 weeks, you know, that's a reasonable amount. And they're charging $22.45 for each check that they're going to cash for you. So you know that after you're cashing your whole year's worth of checks, that's almost $600 that you're giving to the currency exchange just to cash your checks for you. And that doesn't count, you know, having to order money orders or any of that other stuff. So it can be quite costly over the whole year.
Right. So that brings us a beautiful segue into why should we keep our money in a bank?
Right.
And we've
Well,
got
there's many
some bullet
reasons.
points there.
Yeah, exactly. And you know what, I would say too, as we're going through this, if you have questions or would like more clarification, please use that chat feature because we want to make this meaningful for you. And like Dee said, we're going a little bit deeper into some of this, but if there's something you have a question on or something you feel that we miss, please let us know because we want to make this time worthwhile for you as well.
But just remember that this is being recorded and it will be shared publicly, so nothing very personal.
Right.
Put it in the chat. So try and keep it very generic if you can.
Okay, well, getting back to this, why keep your money in a bank? I think a lot of it is just the safety and convenience. We hear a lot about security breaches, and it's just not a safe idea to go to the currency exchange like we just explained and cash your check and walk out with $1,200. It just is much safer to keep it in a bank. The banks are many times set up with your employer for direct deposit, which makes it so easy for you to do that and to use that feature. That way you know automatically your check will be deposited on that day. There's also online banking. The internet banking is huge. The direct deposit, you can go to the ATM machine for if you need cash at a certain time. And there's also a lot of apps that many of the banks have to really make it easy for you to manage your money. And they have a lot of things for you to use just on their own website. So banking also is something that you can use as you acquire money and move through your savings and things, because they have financial advisors that are there to help you and the personal bankers. So they can really help you if you have questions or have any concerns about banking or any other financial needs.
One of the things that I'd like to mention, too, is a lot of times if you have a direct deposit going into your checking account, and if you pay any bills through a direct debit, then oftentimes any fees that the bank might charge you might be waived. It's one of the things that they do to try to get more people to use the automatic systems.
Yep, absolutely. And so, around that idea of fees and what kind of products banks have, you might want to check with a couple different sources to see what kind of checking accounts they have to offer, what their fees are, their overdraft policy, so that you can compare and get the best fit for yourself.
Good. Are we ready to move on to the next slide?
We are.
All right. So now we're, whoops. I forgot to pull this one out. Let's do this poll question before we start. What do you think a spending plan is? Look at how smart our audience is.
Really? I'm impressed.
That's very good. All right, we're going to hide this so that we can go on with our poll, with our presentation. So, Juliana, tell us about financial goals.
Financial goals. Everyone should have financial goals. A short-term goal might be something as simple as saving enough money to purchase a car. A long-term goal might be having enough money for retirement. So the only way you're going to make those goals attainable is if you have a spending plan. In the old days, we used to call that a budget, but now spending plan is much more friendly, I guess, and more accurate, because you're actually coming up with a plan on how you're going to spend your money. So you know what your income is going to be every month, and then you know what your fixed expenses are, and then you can kind of budget and come up with what you want to do as far as spending your income. If you have more expenses than income, you're going to see that after you come up with your spending plan, because you're going to see where your money is going every month, and maybe that's going to show you some areas where you can cut back. So you have your household expenses. Those are pretty much fixed, your rent, your mortgage, utilities, things like that. Your health and safety, of course, you want to include that in your budget, whether it be prescription drugs, doctor's visits, etc., insurance. And if there's a gap between what your income is and what your expenses are ending up to be, you can seek some assistance, whether it's from a nonprofit agency that can help you with budgeting and savings, or you may look outside the budget arena and look and see if there's some place such as a food pantry where you can get help with your groceries and thereby decrease your food budget.
Good. Okay, so before we move on, for your spending plan, your budget, you should include, this is a no-brainer, we've got a very smart audience, don't we, Juliana?
Yes, we do. And I'm really excited that people are including savings as part of your budget because you may need even just, what do they say, 6 months of savings to cover your expenses if anything were to happen to you. But, there's always things. Life happens to you. So, your clothes washer could go out. Your brakes could go out on your car. So it's nice to have money set aside to cover those types of contingencies, as well as saving towards your retirement and your long-term goals. One thing when Dee and I were coming up with this, real quick, we put in that one, entertainment, vacation, clothing. Budgeting doesn't always have to be just for those big type of initiatives. If you want to take a vacation or do something with your children, that's fine, and we encourage that because, life is short, but make sure you budget for it. So that's just one of the things we want to point out.
Right. Here's an example on the screen of what you might want to do with your budget. So we also have a worksheet in the download and print so that you can create and consider all of the different items that might need to be included in your budget. And again, when we talked in our last webinar, being laid off or getting a new job might change your budget perspective, so you need to reinvestigate it on a regular basis. Let's talk now about that savings option.
Okay, well, I think we kind of went over this a little bit in the budgeting, but why save? It helps you to manage your money better, so if those little blips come up on the radar, you can cover it without going into a financial crisis. Saving toward specific goals, it will ultimately improve your living standard because you're going to have that savings set aside. It's a great peace of mind. And also it's goals that can be fun, so saving for a new car, saving for a new house, something like that. A lot of the savings tools, savings accounts, money markets, certificate of deposit, these are things, again, that if you can talk to someone at your bank about, they can help you kind of walk through some of these. There's licensed financial planners that can help you. Make sure you take advantage of that expertise when it's available. The other thing I wanted to mention about this, too, is, it becomes a habit. If you get into a savings plan, it's a habit to save that money. Take advantage of the tools that may be available through your employer, such as a 401k. Make sure you're utilizing that, as well as any other tools that they may have, such as a stock share plan or something like that.
So there is a difference, though, between the savings accounts and those items there, and then the stocks, bonds, mutual funds. Do you want to tell the audience just a little bit about that difference?
Well, it's the stocks, bonds, mutual funds. Those are investment tools that may be available to you. There's a lot of different ways you can access those, whether it's, again, through a financial planner. Some people do their trading online themselves. Just make sure you're educated because there's also the potential to make money, but you can also lose money using those tools. So make sure you get some good advice and maybe talk to a couple different people before you decide who you're going to work with to help you with those tools.
Right. So before we move on, let's pull out another poll question. Is it good to borrow money? All right, they're torn, but at least nobody's saying no. What do you think about that?
Well, I think, in certain aspects, borrowing money can be a good thing if you're borrowing it for the right reasons. Because when you borrow money, as the first bullet point says, you're going to have to pay that back. So if you're borrowing money to go on a vacation, is that as worthwhile as borrowing money maybe to go back to school to get a degree so you can get a better job? So it's just something that you have to really make sure you're borrowing for the right reasons. Credit is convenient, useful in emergencies. Again, if your furnace goes out and you don't have that money set aside in savings, you're going to have to perhaps put that on your credit card because you need a furnace, so you can't live without that. So you can use them for certain reasons. Purchase over time, it can affect your employment, housing, and insurance. Those are all things that your credit score will impact, and we're going to talk about that a little bit on the next slide. Different types of ways you can borrow, and again, we'll go through this in more detail, would be an installment loan, credit cards, and home loans versus some of these other services like a rent-to-own service, payday loan service, refund anticipation loan. Okay, these are all no-nos on the second bullet, so we don't like those. So that would be an example of borrowing that would not be as advantageous as borrowing perhaps to purchase a home. Now, the 4 C's of credit, these are kind of the key words here: capacity, capital, character, and collateral. The first C is capacity. That's your ability to repay the loan. So do you have the income to cover that loan, that money you're borrowing? Capital, bank account, that type of thing. What kind of finances do you have, savings, etc.? Your character, that comes largely from your credit history. So when they take a look at your credit report, what's been your character when it comes to borrowing money in the past? And then collateral would be, what are you using to secure that loan? So for example, in the case of a mortgage, the collateral would become the house that you're purchasing.
Good. So that brings us to our next question. What is a good credit score? Again, we've got a pretty smart audience. Different types of lenders consider different numbers acceptable, right?
Well, of course, the higher your credit score, the better. But really, a good credit score, the 737 is a good credit score, because anything over like 720, just for an example, in order to purchase a home, most banks, if they're doing a conventional mortgage, they will not even look at your application unless your credit score is about 680. So credit is very important.
Yes. Yes, it is.
Well, we're going to be talking a little bit about credit now, and this is more specifically about your actual credit report. So we're going to be taking a look at a credit report and then the pie chart that shows how your credit score is determined. But basically, credit is the ability to borrow money and your promise to pay back the loan. So this is what your credit history has looked like in the past, and that's what someone's going to use to determine how likely you are to pay back their loan, because they want to make sure that you've paid back other people. So it tells lenders about you, and it really gives a history of what has gone on in your financial world. We're going to take a look at the credit report because there's identifying information on there, history, public record information, such as a bankruptcy, any judgments, tax liens, that type of thing. And as you can see here, it's going to stay on your credit report for many, many years. Scores range between 300 and 850. This would be with the FICO scoring. There's also some other credit scoring, I guess, programs that are out there. FICO is the one that most lenders use, especially for a mortgage. So that's why you hear people talk about a FICO score, because that's the most commonly used. It's made up of Equifax, TransUnion, and Experian. Those are the 3 credit reporting bureaus. Each one might have a slightly different score when it comes out on your credit report. The bank is going to look at your middle score. So if you have 3 separate scores, they'll take the one that's in the middle, thinking that's the average. Everyone should know what's on their credit report. So on this slide is the link to annualcreditreport.com, where you can actually access your own personal credit report from the 3 bureaus. You will not get a FICO score for free from this report, but at least you can see what's on your credit report and make sure everything on there is accurate. One
of the things that I noticed in doing my research for this webinar was the link that's in the bottom of the page from the Chicago Tribune. It was an article about how your use of social media may now be able to affect your credit score. People are looking at social media and looking at what you're doing on social media. So if you're trying to apply for this or that, they might go to your social media and say, look to see, well, did she just lose a job? Is she doing a whole lot of extravagant spending? All of those different things. What are you posting and how can it impact your credit score? So you need to be very careful no matter what you're doing on social media, and especially if you're in the market to make a big purchase or find any of those, apply for any of those bigger loan kind of things like a mortgage or a car. So it was something I thought that was very interesting that I thought I would share with you. So make sure that you download the presentation and click on that link to take a look at that article. Let's move on to our pie chart here. And Juliana, do you want to explain the parts?
Sure. This is how your credit score is determined. The credit scoring model is very complicated. As I said, the three bureaus could have three different numbers. And also your credit score is going to change. It's not once you hit 800, it will always be 800. It depends each month. How much spending have you done? Did you pay your bill on time? And so it's always going to be changing. The biggest part, as you can see, is your payment history. So again, that goes back to your character. How have you handled the debt you've had in the past? And that's why it's very important to have credit, because if you don't have any credit, there's no way for them to come up with a payment history. They don't know what you're going to do when you get a loan in the future. Are you going to pay it back? Well, they don't know because you've never paid anything. The amounts owed, 30%, that's another huge component. If you have a credit card and your spending limit is $1,000 and you've charged $100 and you pay it off every month, you're a much better credit risk than someone who has that same $1,000 credit limit and their balance is at $950 and they're only making minimum payments each month. That amount that you owed should be no more than a third of your total available credit. Again, your length of credit history, how long have you had these credit cards? To that point, people say, I'm going to pay off all my credit cards, I'm going to cut them up, and I'm never going to use credit again. That used to be the old way of thinking. Now you do need to maintain that credit history. So if you can show that you've maintained a credit history for 10 years, something like that, and you've paid your bills on time, you're a much better risk than someone who has credit only for 6 months. For most of the mortgage, again, I'm going to that, or most of the card, they want to see a credit history of at least 12 to 24 months to show that you have been managing your credit appropriately. New credit and types of credit are both 10%. Types of credit would be, is there a mix on your credit report? Do you have a car loan, a Visa, and maybe a Shell gas station? Do you have a blend of credit? The new credit impacts, basically, are you maybe in financial trouble that you're going out and opening a bunch of new credit cards? Are you going to each store that you shop at and opening a store credit card? So you want to be careful with that new credit because it can impact your score more slightly than the others, but it's still there.
Good. So now that we've talked about what's in it, we can talk about what's on it. And if you need to see this larger, at the top of this little window is a little arrow that you can take this full screen. Otherwise, you can download the presentation and investigate it more completely. But Juliana, let's talk, and I'm pulling out my arrow here to point for you, but it's not coming out properly. So at the top, we've got basic information name, correct?
Right, and this is something that you're going to want to check because if there has been anybody tampering with your credit or your social or anything like that, with that horrible identity theft that is out there now, take a look at your credit report because it's going to have your personal information, not only your current address, maybe past addresses, a maiden name, a married name. So make sure that there aren't any discrepancies, even with something as basic as that. We want to make sure that's all accurate. Are
and
you
then
going to
down
move your arrow?
further. I can't get the arrow to work.
Okay.
I'm sorry.
All right. The same thing with your employers. It's going to say, some of your past job history, where you've worked. The credit report actually came out maybe about, probably 40 years ago. Before then, they didn't have that. But it doesn't show how much money you have in the bank. It doesn't show how much money you make. It just shows the information about your credit history. The consumer statement, that would be if there was something negative on your report or if there was something that you were disputing, you might want to put a statement there, just letting people know that are looking at your credit, what's going on with your credit report. The account summary, each credit report looks a little bit different. So this is just an example of one from one of the bureaus or one of the credit reporting agencies, but they're going to have the same basic information. So this would be potentially negative, that cable, you were delinquent, the amount that you're owed, if there's any collections, things like that. Then the account's in good standing, so it's going to show what you have, this bank card, how many, if you were ever late, never late, what your monthly payment is, your high balance, what your credit limit is, all that information. So if you were late on your credit card, it's going to show either 30, 60, 90 days, and negative credit does not come off your report for 7 years. So even if you were late on one payment 5 years ago, it will still show up on here. The inquiries would be if anybody's looking at your credit. So I think, if you go into a store and they are going to open a credit card for you, they're going to take a look at your credit history. The same thing with a mortgage, the same thing with anybody that's looking at your history. The public record information would be, is there a judgment filed against you? It would appear on there. Any bankruptcies, foreclosure, anything like that would also appear on your credit report.
All right. So thank you for explaining that for our audience. Here's the big question. Why do we need to establish credit? Again, we have a very smart audience.
We do. So the answer to this would be all of the above, but more and more employers are looking at your credit when you apply for a job, and they want to see who they're hiring, and that's just kind of a fact of life. And I tell people, everybody else is looking at your credit report. You better take a look at it so you know what's on there too. Building your credit. Now, there's a lot of ways you can build your credit, and this is something I tell people too. It takes a while to get that credit history. It takes a while to build good credit. Once you have a good credit score, it's so important. If you miss one mortgage payment, you can lower your credit score by as much as almost 100 points. So it's just very, very critical. Ways to build your credit. If you don't have any credit, apply for a small bank loan. A lot of banks have like a savings secured CD loan. Again, go to your bank as a resource and see what they can offer you to help build your credit. Apply for a local store credit card, especially when you're just first starting out with credit. Sometimes it's easier to get like a Walmart credit card or something like that than an American Express. So at least you can start that credit history. Make large down payments. Pay off those credit cards when you can. Negotiate your credit payments. That's not as easy to do with the credit card, but for some other ways, there's some other avenues you can do that. Ask a friend or relative to co-sign a loan. You may also ask someone if you could become an authorized user on their credit card to help you start that credit history. But the main important things, as you can see here, pay on time, keep your debt levels low. Those are the two. That's the 30 and 35% of the pie chart. It comes up again here. It's just very, very important to do that. Deposit into a savings account. That would be not necessarily building your credit, but it's going to show that you have that financial wherewithal to establish a savings account, which is also important. Ask lenders to review utility bills. This is sometimes if you're applying for a loan and you don't have a lot of credit, but you can show that you have a payment history of paying something. That's called alternative credit, and in some instances that can help build your credit.
I remember a long time ago when I was very first coming out of college and just getting my first jobs, they would look at the utility bills because I didn't have credit established. So it's good if you can ask them to do that.
Right.
All right. Now we're going to talk about which credit card offer would be best, because guess what we're going to talk about next? This is going to take a little bit more reading on our part of our audience here. Let's see. Do we want to talk about any of these and give them a couple of clues?
Well, I think that when Dee and I were coming up with this little quiz question, there are so many different types of credit card offerings out there. I think that's one of the main things. And if you're someone that your mother lives in Arizona and you want to go see her once a year, you know, maybe a credit card that offers some frequent flyer miles would work for you. But you have to be careful because something like the Save 10% today by opening an account and your interest rate is going to be 25%, well, you just kind of negated that 10% unless you're going to pay that off every month. So you really need to know what your spending habits are, what your budget is, and what would work out best for you. Because if there's no sense having frequent flyer miles if you have no money to pay for a hotel when you get there. So you have to just see what's going to be good for you. As far as the charity credit card where a percentage goes to the organization, there was just an article in last Sunday's Tribune about that, how really that, I think it's like 0.03% of your charges actually go to that charity. So you need to be careful. Yeah. I need to fly more too.
So let's talk about credit cards.
Well, these are the different types. So credit cards, you know, your Visa, your American, well, not American Express, but Visa, your Kohl's card, you have a pre-approved dollar limit, minimum monthly payment. So that's where it's a revolving line. It's always going to be different. You charge it, you pay it down. You can charge it, pay it down. So those are, a lot of people are familiar with those. The charge cards, that would be your American Express. So you have to pay that balance off monthly. The debit cards, they look an awful lot like a credit card, but they take the money directly from your checking account. Those do not report to the credit bureau. So if you think by using your debit card it's going to help you build your credit history, it really does not. That's the one you need to be careful too as far as the identity theft. This just happened to me. The bank called me and they said, okay, we shut off your debit card because we saw that there were purchases made in New Jersey, Tennessee, California, all within a 15-minute period. The debit card has access right to whatever money is in your checking account, so they can keep going until all your money's gone. The charge card, you know, they can also access it, but it's a limited amount and it doesn't access the money you have in your savings. This is what we talked about in our quiz question. So what's going to be best for you? Compare the percentage rates, the fees, the grace periods, late fees, over limit fees, cash advance fees. All of these can be different, and you have to compare and contrast. Most financial experts say don't take a credit card that has an annual fee. You don't need to do that. Also watch if you need to take cash advance on a credit card. Oftentimes, if your regular interest rate is 12%, the cash advance fee would be 29%. So make sure that you see what's going on. And, their credit cards are good for a tool. They're necessary. If you don't have a credit history right now in the financial world, you don't exist. So you do need to have that credit history. Make sure you're managing it properly, and it can be a benefit for you. How to pay your bill by mail. I hardly know anyone that writes a check anymore. On phone, online, direct debit, you can set that up so that you're never late with a credit if you know that you're going to be using that same card every month. Don't pay only the minimum. I mean, a lot of times now in the statements it shows you if you pay the minimum, it's going to take you 3 years to pay it off, and you're going to, on a $4,000 bill, you're going to pay $8,000. And then they'll show you if you pay, $100 more a month, it's going to cut it into 3 years and stuff like that. So the minimum amount, that's really troublesome, so try not to do that. Opt out of mailed credit card offers. This is really a good thing to do so you don't get all those offers in the mail, because a lot of times those offers can be taken out of your mailbox by somebody and they can sign up for a credit card in your name and you don't even know about it until it's too late. So I would strongly suggest that as a takeaway from this presentation.
The other thing, if you still do get those credit card applications where you're pre-approved for X dollars, I get them still, but I put them through my shredder so that even if somebody is rooting through my trash, all they're going to find is a shredded up application. So that's one way to take that if you haven't taken the time to do the opt-out pre-screen yet. Let's get our next poll question. What's an example of an installment loan?
I'm impressed.
Cool. All right, we're going to give you one more moment to answer. Do you want to talk about their answers here?
Sure. Well, we're going to go through this on the next slide a little bit more.
Okay.
The only one that is not an installment loan is that store credit card. Remember, that's revolving debt. So it's always going to be a different amount every month.
All right. Let's talk about loan to own.
So again, installment loans equal monthly payments for a specific period of time. So a car, you take out a loan for your car payable over 5 years. Your monthly payment is going to stay the same for those 5 years. So that might be electronics, household appliance, things like that where you have a specific period of time. Mortgages, home equity loans are secured by the collateral of your home. Home equity line of credit is different because that you pay off every month as you use it. So the home equity loan is something, again, you might take out for 10 years. You have a set payment every month. At the end of the 10 years, that debt will be forgiven. Mortgage, 30-year fixed. Over the course of the 30 years, the loan is forgiven. It's been paid off. Student loans, also unsecured, but that's still an installment loan. Now, these have specific monthly payments. As we said, it's going to be the same every month, generally a lower rate than a credit card. And the main thing is the payment includes the principal. So you're actually paying down that debt. You're not just paying the interest on that. You have the right to cancel when you take out one of these, generally a 3-day period of right of rescission. Can be open to predatory lending practices. You have to make sure that you go with a reputable bank or, I guess, the car loan package. With cars, though, always check with your bank, too, because oftentimes the rates and the packages that the dealers have are not as good as the ones that you can actually get from your bank on your own. So make sure when you ever, you take out a loan, you do your homework.
It's always the best thing to do, no matter what you're going to buy, is do your homework. All right. What is the most common password? And this is a little bit of a trick question here, but we're going to be talking about in our next slide about identity theft. One of my friends is an IT consultant. She's spoken on a couple of our webinars. Her suggestion to people is to use the first letter of a phrase or a sentence of each word. So if you want to use like Low Spark of High Heel Boys, as I think that was a song, I don't know it, you would use that first letter of each of those words. So that, and then add some numbers and some symbols, and that makes your password a little bit more secure. All right, let's hide this poll. Let's move
Although
on.
whoever said the password, that is the number one password, if you can believe that, followed up by 1, 2, 3, 4, 5. So it doesn't take a whole lot to crack that code, does it?
And that's for a few years in a row. So
right. The problem I have, Dee, is I come up with this fabulous password, and then I have so many different accounts that I need to have passwords for. I forget which one I use for which account, so I always have to ask them to send me my password.
Yeah, that's tough. So
But
what about identity theft?
Identity theft. Protect your personal information. Social Security, your PINs, password, credit, debit cards. It's just, there's so much identity theft out there right now. You just have to do whatever you can not to make yourself a victim of somebody that can get into your account. As Dee said, protect your incoming and outgoing mail. If you do use checks to pay your bill, never write the check and put it in your mailbox with the flag up, because there's something called washing, where the identity theft occurs. They actually can remove the ink of the pay to the order of and write their own name in there and cash the check. So you have to make sure that you just protect yourself as much as you can. As we said at the beginning, sign up for that direct deposit. Whether it be a paycheck, Social Security check, make sure that it goes right into your bank account. Keep your trash clean. As Dee mentioned, having a shredder is an excellent idea. The bank statements and credit card bills, a lot of times now you can get those electronically, so you don't even need to receive that in the mail. Be mindful when you are on the Internet. Make sure that you're keeping, you know who you're talking to, who's talking to you. No bank is ever going to send you an email saying, oh, we forgot your Social Security number. They can make up a screen on your computer that looks like it's coming from Chase, from Bank of America, whatever. But your bank is never going to send you that type of form and ask you to fill it out. So just be really careful with what you're doing on the Internet. And again, check your credit reports. That's kind of one of the main things that you can do to make sure that there's nothing popping up on there that is not you or is not something that you want to have on there.
And this is just a tad bit off topic, but Microsoft, Windows, Google, they will never call you to tell you that something's wrong with your computer. They wait for you to call them to tell you that you've got something wrong. They don't call you. So remember that too, because phone call scams are another way to get your identity over the phone and rip into your credit.
Yeah, right, I think we all know somebody who has had this happen to them, and it's awful. So
right.
Do your best.
All right, how much money should you pay to have your credit repaired, just in case something does happen? All right, the audience is pretty smart. The one answer that we talked about, that Juliana and I talked about, is depending on some not-for-profit organizations, there may be a small fee associated with those not-for-profit organizations.
Right,
So
and that would be the sliding scale. So sometimes they will charge a small fee just to help you with that, depending on your income level. But most of the nonprofit agencies do not charge. Just when I made the phone call to find out how much the check cashing company charges for the check cashing, I just looked in the phone book, our little local book here. There were 16 different listings for companies that would help you fix your credit. Financial recovery is tough. If you have gone through a job loss, an illness, divorce, it can take you a while to get back on your feet. The main thing is evaluate your current financial situation. Where are you? A lot of times people get so flustered and so overwhelmed. You're getting bills in the mail, you're getting the phone calls. You just start throwing the envelopes in the garbage without even, seeing what's on there because it's going to be so depressing. Okay, step back. Yeah, you're in a bad place right now. What can you do to recover from that? So income versus expenses, you're going to go back to the basics. So go back to your budget. You're going to have to fix your budget. Your basic necessities are first, high priority expenses next, and then whatever else, if you have the money to pay it, then you can go ahead and pay it. Evaluate your spending plan. If you're looking for a job, you're going to need to have a phone so the prospective employees can call you. But you don't necessarily need to have the internet at home because you can go to the library and use it. So you're going to have to see what you need to do as far as making up your own spending plan. Get some help before you get too overwhelmed. So here's a couple of resources. Again, we have a whole page of resources that will be coming up soon. Check your credit. If there's any errors on there, fix it. Call your creditors, explain the situation. If you've been a good customer all along and you have that good credit history, they're going to be more willing to work with you as you go through your little financial situation. Ask about hardship programs. Again, there's many state, federal sponsored nonprofit agencies in the area that can help you. And they can distance themselves enough away from your problem where they can be a voice of reason and really help guide you through the process where you're so upset and emotional about it. So be wary of unsolicited offers. When you are in trouble, you get all those things in the mail saying, I can fix your credit, I can prevent your home from going into foreclosure. They're businesses, yes, at best. Some of them are outright scam artists. So just be really, really careful of who you're using and be just mindful of the resources that we're giving you. It's a great place to start.
Excellent. All right, so what we're going to talk about right now are some resources that you can use. And we have a brand new web page that I just finished this morning with the help of Chelsea and Scarlett and Olivia that is on money management, and it's got all of the MoneySmart modules on it. I'm going to show you that in just a moment. If you do want to go to the Federal Deposit Insurance Corporation, you can read more about the MoneySmart initiative. We do have resources available during MoneySmart Week. There's all sorts of banks of which BMO Harris and Juliana are part of, so that they really take a big part of MoneySmart Week, and that happens in April, right?
Yep, the end of April. So go on the website. There's literally hundreds of financial education classes. They're all free. They're all led by industry experts, everything from foreclosure prevention to buying your first car. So a really good resource.
We also have a link on here for the Consumer Credit Counseling of Illinois. I know that they have a local office in DeKalb, Illinois, but when I was talking to the counselor there, she said they will field calls from all over the state of Illinois. So if you just go to this website address, if you are having problems with your credit, you can talk to them and they can help you through it. Now that's one of those social service agencies that we talked about where they may have a sliding scale fee, but in most cases it is very nominal. And we also have a couple of links here for government benefits that are available. Before we go on, what I want to do is I want to pull my screen over, and I'm going to make this really big so that you guys can see it. And I'm having problems grabbing the corner. Chelsea, if you can give me a hand here. I can't get it to get, I don't know what's going on with my presentation here today. Anyway, we've got our brand new web page that is money management. It's in the drop-down menu under Updates and Help on Illinois WorkNet. So, and that didn't help me. There we go. Now I can get it bigger. There you go. Can you guys see it? Raise your hand if you can see it better.
Yep.
Yes. Okay, great. All right. So we've got our web page here. It's under this Updates and Help menu. And we've got a basic little slide share presentation in there. We talk about MoneySmart. We have all of the programs on the right-hand side where you can access the presentation itself, the participant guide, and we also have, when available, the Spanish slides and guides for each of the programs. We also have a section further down where we have a series for grades 9 through 12, a series for older adults, and then we have an entire series for small business. So you can take a look at all of these items on here that you may want to use. We have a number of links available on our right-hand side of the page, as well as in the classroom, we have instructor guides in English and Spanish when available for all of these different modules as well. So if you are taking a look, you can see that we have Pay Yourself First in English here and then in the Spanish version next to it. So that is our new money management page. So we would appreciate it if you need to find out any more in-depth information. I know this was a basic webinar again, but we did cover more information than last time. But we have even more information on our money management page. So if you want to dive in, you can do a self-guided, computer-based instruction program, or you can take a look at each of the webinars and move on with those and use the participant guide to help you through each of the modules. So I want to really thank you, Juliana, for joining us today. It was very enlightening. I appreciate you and your expertise. We have a question from the audience, but I'm not quite sure how the exchange rate affects money and retail prices. It's not really part of what our conversation was today, but if you are traveling internationally, you do need to be aware of what the different exchange rates are on items.
Mm-hmm. You know, and I would say if there's one takeaway I would love for everybody to take, come up with your own personal spending plan. If it takes you a couple months to do some tracking to see where your money is going, take the first step today. Write down everything you spend, or use your debit card so you can see where your money's going, and really, really start tracking it, because that is going to make all the world of difference. Believe me, because I went through that myself. And when you see where your money's going, you feel much more in control. You're in charge of your finances, whether you earn $1,000 a week or $5,000 a week. You need to know what you're doing with your money.
Right, exactly. So thank you, Juliana. I really appreciate your time and expertise today. We will be posting a news item that has the webinar recording in it. If you download the Money Management B PDF, it will have the live links in the PDF document. So our guest was asking about where can you find the the links. And if you go to illinoisworknet.com, let me type that into, let me grab the page itself, and I will type our new page into the chat pod. So if you want to go investigate it, there's all of the links that we've used in both of these last 2 webinars on that page as well. So thank you, everybody. Have a great rest of your day, and we'll stay in the webinar for just a moment in case we have any other questions, but I am going to end the recording. So thank you very much, Juliana. Have a great rest of your day, everybody.